If you're starting day trading in 2026, you are stepping into the most competitive markets that have ever existed. There are more traders, more noise, more misinformation than ever before. And most people watching this will not make money from trading, not because they're stupid, but because they start the wrong way. Now, most beginners fail, not because trading is too hard, not because the markets are manipulated. They fail because they never build a real foundation. They trade without a real model. They rely on indicators, signal groups, Discord alerts, and multiple strategies at the same time. That is not trading. That is gambling with better software. And no amount of discipline can fix a broken approach. If I was starting over in 2026, this is exactly what I would do differently. I would remove choice completely. I would trade one market, one session, and one setup. Structure is not restrictive. Structure is what creates consistency. I would trade one market only, and that market is gold. And I would trade one time only, the 9:30 New York Open. On the 15-minute chart, I wait for liquidity to be swept. No entries yet. That is context. Once liquidity is taken, I drop to the 1-minute chart and wait for an inverse fair value gap to form in the opposing direction of the sweep. If it forms, I execute. If it doesn't, I do nothing. That single rule alone eliminates overtrading. Risk is fixed, same stop logic, same position sizing. Not because it feels safe, but because data only matters when risk is consistent. My daily routine is simple. I mark out highs and lows at 9:30 Eastern Standard Time. So here on the left-hand side, we have the 15-minute time frame. Now, before 9:30 pre-market hours, the market can do whatever it wants to do. So the market can trade sideways, trend. It doesn't really matter what the market is doing because I only start looking at the chart at 9:30 Eastern Standard Time. Now, I go ahead on the 15-minute time frame and I mark out my closest high and I mark out my closest low. Has to be a swing low. Then I wait. I execute one clean trade if the model appears. If it does, I journal it. If it doesn't, I walk away. Now, this setup doesn't guarantee wins, but it removes confusion. Most people will not follow the rules this strict, and that is exactly why most people fail. So to break over the strategy, I mark out the highs and lows in the 15-minute time frame, and I drop to my 1-minute time frame. Now the entry is clear, and I gave it away in the beginning of the video. I just wait for the market to sweep either a high or a low. It couldn't be simpler than this. So if the market trades up, sweeps a high, I wait for a fair value gap to form in the leg that swept the high. That is so important. The fair value gap can't be over here. This is not valid. It has to be in the leg of price that swept the high because this is my relevant displacement leg. Now, what is a fair value gap? Well, it is simple. It is just a 3-candle pattern where the middle candle creates a gap between the first and the second candle. So if we have a wick here and we have a wick here, we have a gap between the first candle high and the third candle's low. That is a fair value gap. And I'll show you clearer once we get to real chart examples. Now, my entry is simple. I just want that gap to get closed below because the logic behind this stands. If the market is bullish, that gap's going to hold and push prices higher. If bullish price action fails and we close below that fair value gap, Well, it is an early sign that the market can be reversing. That is why this is my entry and my stop loss goes above the recent swing high. And I target a simple 2R. This keeps it beginner friendly and keeps it extremely consistent. All right, so here we have our first in-depth trading example here on gold on the 15-minute time frame. Please note, I want you to mark out your sessions first. So we have my Asia session, my London session, and then my New York session. Now, the reason we mark this out is so we can see exactly where 930 is. And as a complete beginner, I want your trading to be simple. I'm here to help you, to show you how simple trading can be, and that simple trading is more often the best type of trading that you can do. So, keeping things simple, my Asia session runs from 6 p.m. till midnight. My London is from midnight to 6 a.m. and then it is from 6 a.m. to 12. So 6-hour sessions. If you need this indicator, it is called Sessions, FX Market Sessions by Boyd Toki. And please change your chart timings to UTC -5. Okay. Now with that out of the way, we can get into our first real in-depth example of how this strategy works. And just for the haters out there, because I love you so much, is that I'm not cherry picking. I'm picking examples to explain how does this strategy work. And at the end of the video, I will reveal my back-tested results for this model. Okay, coming to the chart at 9:30 a.m., we mark out our closest swing high here at the top, and we go ahead and we mark out our closest swing low at the bottom. And the reason you can't see it is because my sessions hides the high and the low. So I'll just keep my session indicator on to keep things nice and simple. So now that we have our high here at the top and our low here at the bottom, we wait for that 9:30 candle to open. We see that 9:30 candle opens. We do trade up, but do we take out this high? The answer is no. The market has failed to sweep out the high, leaving a gap. We didn't take out that high. Do we take out the low? Yes, we do. So now what do? Now we drop to the 1-minute time frame to see if we do have fair value gaps on the way down, sweeping out that low. So here on my 1-minute time frame, we can see that we have our low to the left. So I'm just going to go ahead and clean this up. Do we have fair value gaps sweeping out that low? Well, we do have a very nice gap over here. We can see that if I go ahead and I zoom in, the first candle's low does not touch the third candle's high, leaving a gap in price action. So we also have a gap over here where we have this low and this high that do not touch each other. But we're not going to use this gap. Only the most recent gap that swept out liquidity to the left will be used for this trading model. So now what do we need? Now we need a candle body to go ahead and close above this gap, turning it into an inverse fair value gap. Remember that fair value gaps show us liquidity and order flow. Here we see that we do have a gap. The market trades into the gap. We respect it. We trade lower. Here we have a very small gap. The market trades into it, respects it, and trades lower. So only one or two things can happen here. We can either trade into it, respect it, and trade lower, and then we would not have a trade. Or we can disrespect it, and that would be an early sign of a reversing market. And then we can get into a trade to ride the wave back up. So all we do is we wait for the market to go ahead and close above it. If we create other fair value gaps on the way down, that's good. We just move it back down. So here we can, first of all, we can see we do have a change in the state of delivery because we do have a closure above a down close candle. This is the first sign of a reversal. Let's see if we do get that inverse gap. And there we go ahead and we close above it. Entry there, stop loss goes at this swing low. and our first target or our only target will be a 2R. If you're new to trading, this is exactly how I want you to trade. And then what do we see? We get some drawdown, we retest that order block, and then the market starts pushing higher. What happens now? We go ahead and we inverse this gap as well. So we see the market inversing that gap as well, which is a very good sign. Also, look at fair value gaps. We form a gap. We see the market trade back into the gap. We fail to inverse it, and then we start trading higher again. This is an excellent sign. Look at this as well. We have what happens. We form a gap. We trade into the gap. We fail to close below. We flip, and we start trading back up to our take profit. Looking at this, again, what has happened here is we have swept out the gap, failed to close below it, but this gap pushes price higher, closing in on our take profit level. We then revisit that, but let's see if we do get that closure below. Not yet. There we close below. So we can move our stop loss to break even if you want to. I'll talk about trade management later on in the video, but as of now, we just let this trade run, and we see that we have hit a full TP for a 2R. Here we have the second example, and in this example, I'll talk about trade management. How do we and when do we move our stop loss to break even? This will also be a bearish example so that you have a good understanding of both directions of the market. Looking at this, we do come to the market right before 9:30. We see this is my 9:15 candle. Now we can go ahead and mark out my closest swing high, which I can do over here. But again, like the previous example, the swing high is blocked by the session indicator. So, but this is my closest swing high. My closest swing low to where price is currently is this swing low over here. It would not be this low because we need the next candle to print and close first. So my closest swing high will be this swing high and this swing low. So waiting for the market to take out either side. We see that 9:30 candle does open and we trade towards the high of that swing point. So looking at this, let's see if the market does want to go ahead and sweep that out. We don't sweep it yet. We trade into a fair value gap, but this strategy is built on swing highs and swing lows. Now we can go ahead and mark out this low because that low has been formed. Waiting for the market to do what it wants to do. We see we do sweep out the high, so I'm just going to mark it, but then I'm going to take it one candle back so I can show you what happens on the lower time frame. So looking here at the 1 minute chart, we see that we do have that swing high here to the left. I'm not going to mark it out because the session indicator does it for me. Looking at this, waiting for price action to sweep it. We do sweep it, and we see there we go, and we have that swing high taken. So now, what do we have over here? Well, here we have a lot of fair value gaps. In a case like this, where we have the same run of consecutive color candles with a lot of fair value gaps, what I would like to do is I like to go ahead and mark out my equilibrium of this move, my 0.5%, and I just want a displacement candle that closes below 0.5 because that would then close below and inverse multiple fair value gaps. So looking at this, let's see what the market wants to do. Playing this forward. Okay, what happens now? Now we form a new gap, so I can go ahead and mark out that new gap, and I can delete my equilibrium because it is no longer needed. I just need the market to go ahead and close below this fair value gap to create an IFVG, and that will confirm my trade. There we go. We close below this one and this one. So this would be my valid entry, market execution. I place my stop loss at the high and I take a quick 2R out of the market. So talking about trade management here, I like to go ahead and measure out 1R, and the way that I do it is I just take my GAN box and I go 1R, and it shows me where my 1R is. So my red line will be my 1R, and I just place an alert on price action over there to see when the market does in fact hit it. So if we hit that 1R line, That is when I move my stop loss to break even. So we immediately dump towards that level. At this point, I would move my stop loss to my entry point. That is exactly what I mean when I say I go to break even and I have a risk-free trade. So I didn't just let this trade run out and do its thing, and we get tagged out for 2R quite quickly. So for backtesting purposes, I'm just going to go ahead and place a green line on this trade on my execution candle, because that would be the candle that triggered me into the trade. Leaving my bar replay here, going to the 15-minute time frame, this is my back-tested results for the month of December. Here we can see that my blue would be break even, green would be wins, and red would be losses. So if we have to count all of this up, what do we have? Well, we have one break even. Just going to go ahead and bring up my text. Okay. One break even, so that is 0. Then plus 2, plus 2, plus 0, plus 0, plus 2, plus 0, plus 2, 0, minus 1, minus 1, plus 2, plus 2, plus 2. What does this equal? This is my trades for the month. So we have 2, 4, 6, 8, 10, 12, 14, minus 2. That leaves me with 12R for the month of December, with a 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 15 trades. We have 5 break-evens, 2 losses, and we have 7 wins. That is excellent statistics. And guys, win rate doesn't matter. As a beginner trader, I don't want you to focus on win rates. I want you to focus on positive expectancy. This strategy has a completely high win rate with a 2R multiple that has an extremely high profit factor. And that is what I want you to focus on when you are new to trading. You have probably seen so many strategy videos online, but you still struggle to take money out of the market. I know exactly how you feel. I used to be in the exact same position as you, and it took me years to figure it out alone, which is why I have created the mentorship program to help my younger self, to mentor traders and help them avoid all the time I wasted and the mistakes I made. But let me be clear on this. This is not your average Discord Plus course. This is not a dead-end course that leaves you guessing and more confused than you were before you started the course. In this session, in this program, you get live trading with me 5 days per week, from Monday to Friday, the same time of day, trading the same model and the same asset. You learn my proven mechanical strategies that have proven to work on every market and any market that you choose to trade. I've been trading for 14 years, and these are a culmination of everything I have learned that works put into a simple step-by-step strategy. You get personalized one-on-one mentoring sessions directly with me. You get direct access to me. You get real accountability, and you get daily market breakdowns where I highlighted every single day. I highlight trading opportunities. And I'm so confident in my system that if you don't get funded using my system, I will personally trade alongside you until you do get funded. We trade live, we review every single execution, and I focus on your progress as a trader. I don't sell you excitement. I want structure in your trading. So if you want structure instead of guessing, that link is the first link down below. And because it is Christmas week, lifetime access is currently 10% off, but only for a few days. Everything is linked down below.